Okay, now we're moving on to control of cash, and a bank reconciliation is one way to make sure your cash is correct, and it's also a control measure so that you can match what the bank says with what your checkbook says. So we'll begin here, and hopefully it will make sense to you. It's an analysis of the items and amounts that cash is reported by the bank and from your bank statement. So usually the two do not match. Your checkbook may have deposits or things that have been deposited that haven't made it to the bank statement yet, and the bank statement may not have all your checks because some of the checks may not have been entered into the bank yet or been sent to the bank. The other thing, sometimes banks collect your receivables for you as a service, or maybe there was a service charge on your account that hasn't been recorded on your checkbook. So there are all kinds of reasons why those two do not agree. So let's look at a few of them so they kind of make sense. So it's got two sections. A bank reconciliation has two sections. You're going to have the bank section, and you're going to have the company section, or your checkbook. Oops, it went one too far, I think, maybe. Nope, there it is. Okay, let's go back. So, and the way this works is you'll have your cash balance according to the bank at the top. You will add in deposits that are in transit, because those may not be on it, and they are in your cash, and you will subtract outstanding checks that haven't came in yet. You know how you'll check those off? Well, you'll add deposits and subtract checks to come up to an adjusted balance. Now, you may also have errors you may have to deal with here. That's just something, and it's another reason why you check out the checks that you've sent and you analyze what the bank has written and what you have written down. Now, the other half of this is the cash balance that you have in your checking account. And you would add to that notes the bank has collected for you, or maybe accounts receivable that they've collected for you, or you will deduct unrecorded bank debits, as they call them, for checks that have been returned, or service charges that they've done, maybe for collecting for that accounts receivable. Now, when you add and subtract these, and add and subtract these from these two totals, these should equal. It's very important that they do. So there are certain steps that you take with a bank reconciliation, and the book really lays them out very well, and you'd be very good to copy these or to write them down someplace so that you have them handy, or bookmark it in the book. You're going to enter the cash balance according to the bank, and then you're going to add the deposits not recorded. You're going to deduct the outstanding checks and come up with an adjusted trial balance. That's the first half. That's the bank half. Your half, your company half, is you're going to enter your cash balance according to the company checkbook. You're going to add the credits from the bank, such as collecting the accounts receivable. You're going to deduct any charges or fees, and then you'll have the adjusted balance for that. Those two should agree. They have to agree. They have to equal each other. Now, if you step through it step by step, let's kind of look at this. So we'll use Power Network. The bank statement shows 335978. So let's go to the next one. And so step one, you put that on that's the cash balance per the bank records. Now, step two, there's a deposit on your books that's not recorded on the bank statement. So what do we do with that? We add it. So now I have a new balance here. What's step 3? Step 3 is there are outstanding checks that haven't came through the bank yet. And they amount to $1,500, it looks like, $1,544.99. So those are going to get deducted. So now you have a new balance of $26,630.99. Let's try it again. $2,630.99. So now we're ready for the other part. Our cash balance in our checkbook says it's $2,549.99. So we'll put this right here. These two still don't match, do they? Even after being reconciled to this point on half. So what's the next step? Well, it looks like the bank collected $400 of interest for us. So that gets added in because we don't have that on our books yet. Next step, step 7, we have a check that was returned by the bank for insufficient funds, and there's a bank charge of $18. So let's see what we do with that one. Well, it looks like we're going to have to deduct that that check and deduct the bank charges, and then we have check 879 was recorded incorrectly. It should have been, it was 732, and they put in 723. So who made the error? And that's what we have to look at there. And they made the error. So let's go see how we fix that. So here's an error, and we've corrected it for $9. That means I believe we're going to have to deduct that $9 because we didn't put enough in or take enough out for that check. So let's see what we have now. Now you can see these are all of our deductions. There was the $300 check that was returned. There was the $18 service fee, and there was the error that we had in the check. So that's got to be deducted. And lo and behold, after making those adjustments, these two balance. And this is what it means to reconcile your bank account. And in a formal sense, this is what it would look like. You have your cash balance from the bank, you add the deposits, you add up the outstanding checks, and deduct that. Then you come down for your checkbook and do the same thing. And there you have reconciled your checking account to the bank statement.